Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 23rd of January 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers. So we want to have a look at the developments in the market, and I can already tell you that we made a new all-time high in the DAX, and we're trading close to the level around 13,600 points. In fact, it was an overnight move, respectively. Most of its move happened here already at the or in the pre-market phase, which means before Xetra opened its doors. So you can see here the push higher, and since then, till then we are trading sideways and choppy on an elevated level. Not much volatility to be seen here, and I have to say that's mainly probably based on the fact that market participants are not very sure what to expect from the ECB here on Thursday then, and it's probably not unlikely to get to see a continuation of this choppy sideways action in the upcoming hours, tomorrow too, and then also before the ECB on Thursday. If I probably prefer short engagements or short-term short engagements, even though from a risk-reward perspective they are not really attractive and really interesting. So what we can see is that the market opened with a gap higher, and once we're breaking out of the open range here below 13,554 points, probably happening in the next minutes to hours, then the next target can be found around the highs from yesterday here, around 13,518 points. But now the thing is where to place the stop. If we work with the stop which is above the highs of the intraday action so far, we are working with a stop here of 45 points. So the risk reward is very, if you're nice here in your calculation, you get a risk reward of 1-to-1. But this is, I think, the most you can probably get out of this, and not very attractive, to be honest. On the other hand, I mean, the question is there really so much further potential on the upside? If so, and really if we expect to push higher, then we definitely need to wait for the US equity markets to open, which made new all-time highs yesterday, by the way, too. And we need the momentum from the Wall Street then here for higher quotes in the DAX. So far, what's surprising, in fact, is that the euro stabilizes at an elevated level here, above 122. You can see very choppy action since yesterday. So short-term interesting, probably here the region around 122.15, 122.20. So yeah. If we make it below that level, there's further room, which could bring us as low as 126 at 121.60. Such a push lower could probably drive the DAX higher too, even though I wouldn't be so positive here in terms of such a push higher, since the correlation between the DAX and the Euro USD is probably not given. Not that strongly given anymore, let's say, at least not currently. That could change then on Thursday with Mario Draghi. I myself think that that there's some good potential that Draghi will try to at least sound dovish, and there will be a try of the ECB to probably down talk the euro here a little, at least below 122 here, significantly probably we get to see a push towards 120 in the upcoming days, and the main reason for that is because the euro can stabilize on an elevated level, and is making it difficult, or definitely more difficult, to achieve the inflation target of nearly 2%. So with this in mind here, or not just with this in mind, but also with the comments from several ECB officials here in the last days in mind, which we're talking about uncertainty when it came to the elevated levels the euro's trading at and so on. I have to say that probably with this in mind, chances are definitely higher that the ECB will try to at least, or Mario Draghi will at least try to down talk the euro, even though it's not said that he will be successful with this. So there have been several tries over the last ECB meetings where some might have guessed that the ECB or Mario Draghi tried to just down talk the euro and it completely failed here. Instead, the market traded significantly higher. Remember one occasion here that was in I think it was July, not sure. Was it July or was it before? Not sure. Probably it was here at the end of, I think it was at the end of June, right? There was something in Portugal going here. I'm missing the word. It's a city with S, I think. Not sure about the name anymore, but really it doesn't matter. In fact, the euro had it higher, traded aggressively higher, and let's just see whether there will be such a rhetoric used which can down talk the euro. If so, well, this could then definitely drive the DAX higher too, since a more dovish stance is likely to trigger further bullish action in the DAX and probably pushing us up towards 14,000 points. Even though right now we are already anticipating such a move here. And by the way, if the ECB delivers nothing but just talks about the status quo again, it's not just said that probably the euro has further potential on the upside up to 125, but also that this is a potential fake out here in the DAX, which could then see some significant losses and pull back towards 13,100 points in the upcoming days and into the weekly close. So one thing is definitely given, that the ECB on Thursday is probably more interesting to watch and has the potential to deliver way more volatility than the last meetings of the ECB have delivered. Yeah, so that's it on the DAX. Same is true, by the way, in terms of the trading setup. It's not just that the DAX here, again, from a risk reward perspective, is not very attractive. But it's also that in the euro right now, there's not much action given, not much volatility given. And everything above 122.15 and everything below, let's say 122.80, 122.90 is definitely neutral. If we break out on the downside, so far, somehow the feeling that the downside is more likely to be triggered than the upside. There's further room given then. Nevertheless, don't expect too much before Thursday. So it's probably very, very unattractive, the price action in general and potential trading setups. Let's have a look now at dollar Japanese yen. I think interesting even though currently it's also a very choppy market environment, it's interesting to see that Haruhiko Kuroda overnight said that there's no real reason to change something in terms of the monetary policy from the Bank of Japan here before they haven't reached their inflation target of 2%. And that was interesting, since after the developments around 2 weeks ago, when, oh, by the way, that was something we can already see here. So these pushes lower was here. And this developments here with falling highs and falling lows, this is a 50-minute time frame. It started on the 9th of January and accelerated then on the 10th here. It was initiated by the fact that the Bank of Japan bought less than, or 10 billion less bonds than they were expected to buy, and some market participants interpreted this as a sign of a potential taper and potential more restrictive approach from the Bank of Japan than on their upcoming meeting, which took place today. And in fact, initially, the dollar Japanese yen pushed higher, respectively the yen lost some ground, but nevertheless everything was bought back and even more, and dollar Japanese yen is right now trading back towards the levels here around 110.50. With a break below that level, by the way, there's further room not just towards 110 but also below 107.50 probably. But nevertheless, this definitely needs some potential risk aversion hitting the market too, and this is something which at least currently can't be seen anywhere. But this is very interesting to see that the market reacted to the words from Haruhiko Kuroda, but nevertheless did not give him as much credit for his words as they probably give the actions from the ECB credit, BOJ credit, which took place around 2 weeks ago. And so with this in mind, I think it's definitely interesting to see there's potential downside risk here to dollar Japanese yen, which could drive us again down towards 107.50 here, especially if the market finally probably is hit by some kind at least of risk aversion. The developments here in the dollar yen are especially interesting to me too. So you might remember that I was willing to take position here Canadian dollar Japanese yen from a seasonal perspective. The seasonal pattern starts from the first tick tomorrow onward. So in fact it's today. So it's from 22:01 10:01 p.m. GMT. That's when the seasonal pattern is triggered, and it takes place from the 23rd of January till the, or 24th then, till the 12th, 13th of February. And over the last 20 years, 20% of, in 20 times, so in more than 87% of the cases, Canadian dollar Japanese yen traded higher, on average 150 pips, and when it lost around 50 pips. So a payoff ratio here, the ratio between the average gain and average loss, was 3-to-1. So it's a highly profitable approach here, even though nevertheless I'm not sure whether I want to be long Canadian dollar Japanese yen based on the current developments, and want to be long CAD JPY here below 89.60. I really want to wait till this level or till Canadian dollar Japanese yen makes it back above that level. I think that's way more has a better chance to be successful, and has a higher probability to be successful than now just buying into this current choppy market environment here. It's not said, in fact, that there's probably before then finally making it in the positive territory, that Canadian dollar Japanese yen will see, or will have a look here at this downside again and probably push towards 87. If the JPY can keep on its momentum. So currently JPY is one of the best performers in the G10 currency universe here, and this is definitely something worth watching, and you don't want to be JPY short in the current market environment. So I'm still very, very patient, and I prefer to see a push back above 89.60 to then position myself long with a target around 91.50 and above that. But before that takes place, I think we still need to be patient here a little. And that's it. Yes, so that's it. Let's have a short look. Let's have a short look here at crude oil. We haven't made it below the lows here around 62.80, 63. But in fact, I'm not trading back. As long as we trade below 62.20, 62.30 on a 4-hour time frame, I still consider the short side to be in play, even though these developments here and the fact that the market did not push below that level here yesterday, below 63, is definitely a sign which is showing that probably currently at least there is still enough bulls in the market in crude oil here, which make it not very likely that we get to see a short-term pullback lower here. Nevertheless, I appreciate such a pullback. From a midterm perspective, I consider regions around 58.80, 59 to be very attractive for long engagements. So I'd highly appreciate such a break lower, especially and also because it probably should result in market participants reduce their very heavy net long exposure they currently hold in the commitment of traders report here in crude oil. And that's it. Yeah, so happy trading. Watch your stops, and talk to you again then tomorrow, 10:30 a.m. GMT. I definitely look forward to it. I wish you a nice day. Take care. See you tomorrow, and bye-bye.